Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today our show is called Show Me the Money. My guest is Tom Walsh. He's Senior Vice President with Grandbridge Real Estate Capital. And Tom, I'd like to talk about rates. You know, the Fed's sort of indicating that they're going to be slowly rising rates. Let's talk about rates today. What are some rates typically right now, say on the multifamily area?
On the multifamily side, the Treasury has fallen back down a little bit recently, and we have seen a lot of the rates for most multifamily deals dropping below 4 once again. For the last, say, 2 or 3 months, we've been kind of vacillating around 4, going at 410 down to 390 up to 410. We're probably back in most cases a little bit below 4, as long as you don't have a forward component in your deal at all. The CMBS side is maybe just a little higher than Fannie and Freddie. The rate range in Fannie Mae, Freddie Mac, and the CMBS lenders is a fairly narrow range right now on multifamily. The only, I would say, exception to that would be a lower leverage deal on a really high quality property, because I think the life insurance companies would just kill themselves in lowering the rate down to win that deal. And you could easily end up with where rates are today. You could end up down in the 3.5, 3.4 range, but that's going to be the exception to the rule. Most times you're going to be up in the, say, 380 to 410, maybe 420 max range.
How long can you lock in these rates?
Most of the rates we quote are generally assuming 10 years. Mm-hmm. That's what most Fannie and Freddie loans are done at. That's what most life companies are done at. In the CMBS world, it's the term that sells the best, executes the best on their side. So the great majority of CMBS loans are done at 10 years. If you go to 5 or 7, generally your rate's going to drop somewhat. It drops more with Fannie and Freddie and the life companies than it does in the CMBS world. That's kind of just the way the math works there. But you conceivably on a 5-year deal with the treasuries where they are today, you could be down in the 3 to 3.25 range possibly right now on apartments.
Are any of your clients looking to maybe pursue a CMBS loan or some loan that might be assumable down the road?
Most of the loans we do are assumable. Even a life insurance company loan that may start out being where there's no language for assumption, that's usually something we can negotiate in, at least a one-time assumption. Mm-hmm. Fannie and Freddie loans are readily assumable. CMBS loans are readily assumable. I won't lie to you and tell you that's an easy process, and it can be a little long and a little arduous, but it gets done eventually. So most of the stuff is assumable, and that is important to a lot of people, especially making loans in what we would still call historically a low-rate environment, because people perceive that they've added value to their deal by putting long-term financing on it, and where that value would manifest itself would be someone buying it and saying, I'm willing to pay a little more for that property because it has 9 years left on a 4.1% loan.
Right.
That's kind of the way
especially if you're selling it 3 or 4 years from now and rates have increased.
And that's the bet. We've been waiting, I guess, for about 5 years now for rates to go up,
right.
And we kind of laugh when we even talk about it now because we obviously have no clue where rates are going. But I would say there's clearly more momentum for going up than there is going down. Yet I say that at a time where the Treasury just dropped 20 basis points in a matter of a couple of weeks. So.
Yeah. But, we've heard Yellen and the Fed talk about raising rates. They've kind of warned us, I guess, that it's going to be coming, but maybe slowly. So look in the crystal ball. Give us a guess.
I would say slow would be the operative term. I think the global economy right now is not doing really well. Mm-hmm. The U.S. economy is kind of the exception to the global rule, but the U.S. economy is also doing, if the term would be right, fragilely well. It's like we're doing well, but everyone knows we don't have this huge underpinning under the economy. It's a little bit on the fragile side. I think the people at the Fed are pretty smart people. They don't want to rock that boat at all. I think they feel the need to get the rates off of this kind of zero where we've been for a few years now. Mm-hmm. I think it will be a very slow move though, and maybe a 25 basis point increase per quarter, something where it takes us an entire year to go up 1%. I think it's more likely to be something like that than these radical upward movements.
Remember the old E.F. Hutton commercial where E.F. Hutton would talk and everybody in the restaurant would look over?
Yep.
All right, so here's the E.F. Hutton moment. When is that going to start? Is that in September? Or
I would
what's your
guess. That would be my guess.
Yeah.
That it's probably a third quarter thing. Now, you keep in mind the rate as the Fed deals with the rate is basically where it affects it affects LIBOR. Most deals are LIBOR based now. No loans are based on the discount rate. That's the rate though that the Fed exacts their power on. But everything will kind of follow that. There is no guarantee, though, that the Treasury will follow in lockstep fashion, to the discount rate. We just have to kind of wait and see how that goes. There seems to be a feeling out there in the market right now that a 3% 10-year Treasury by the end of the year is probably fairly likely. I don't disagree with that, other than to say that we've thought that in 2011, 12, 13, and 14, and yet we haven't seen that movement at all. So we'll just have to kind of wait and see. It's not something we can really predict accurately, or we'd be billionaires.
Quick answer to this: what are some quotes you're seeing right now for multi-tenant commercial and retail property as far as rates?
Rates on the multi-tenant commercial property, industrial, retail, office, probably I would say ranging lower leverage deals, getting down maybe in the 4, maybe a spec below 4. Get up to 75% kind of market leverage, probably getting more up into the 4.25 range.
Wow, those are fantastic rates.
They are.
All right. Well, stay tuned. We'll have more on Show Me the Money. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.